Hey, good morning, guys. Welcome to your mortgage rate forecast with Criss, your mortgage rates and news. It is September 20th, and let's get going to the survey. So, Mortgage Bankers Association released their new findings for this week, and they reported interest rates across the nation for the 30-year fixed are up about 0.08%. Not too big of a deal. We went from their reported 4.8 to 4.88, but we are starting to see a rise, which I told you to watch out for in the last video based on the technicals. So where are our technicals now? Where are rates headed? Well, here's the thing. Bonds are worse by 99 cents since my last report. So we've seen a pretty big sell-off. What does that mean? Like, how do we quantify that? It basically means somebody getting a rate 2 weeks ago is now going to pay 1 point more, 1% in fees of their loan amount more to get that same rate, approximately. So we can see that, yeah, you can get the same rate, but it's just going to be more expensive. So if you're getting a $100,000 loan, that would be an extra $1,000 this week versus 2 weeks ago to get that same rate. So here's what we have. Why are rates going up? Well, there's a lot of fear for inflation. So we saw the talk of the trade wars over the last couple weeks, and when the cost of goods goes up, that means we're going to see inflation, and that means investors, they don't want to put their money in bonds because it takes away their profits. So they pull money out of bonds, which actually drives up the yields. So what do we have for the forecast? Well, existing home sales were not so hot, which was helpful for bonds. But today, the Dow Jones Industrial hit its all-time high. On top of that, we've also seen unemployment now at its 49-year low. This is crazy. I think at 201 was the number, 201,000 claims. So super, super low, guys. So I know you're thinking, okay, this is all bad news for mortgage-backed securities. Rates are going to go up. Well, we may see a little bit of a temporary rebound. And all the analysts are kind of agreeing on this. So even though the big picture is going to be kind of bleak for bonds, in the short term, they think the bonds could actually go up and hit maybe as much as 101.30, which would be about 50 cents better, maybe even better than that, depending on. So you can see on my chart here, we have a downward trading channel. We're kind of on the bottom, but we're in the green. So analysts think we can bounce up to about right up here if you look at my mouse. So we could see some temporary relief. So their recommendation right now is play it out. Let's see where they trade, and let's see if the bonds can at least get to that 120, 130 range. And who knows, maybe we could get back to 160. So that means, hey guys, maybe we can make that point back over the next coming week or two. So that's it for the technicals. You know, and just kind of boiling it down, guys. For right now, analysts are carefully bullish, meaning they think that interest rates or the fees that we pay for interest rates are going to improve over the short run. But just keep in mind, we're still seeing a lot of pressure on bonds, and we're still seeing the long-term outlook on bonds to be worse, which would mean higher fees for the rates that you're choosing. And so where's my forecast for the next couple weeks? We're trading at $100.77. We could go as high as 101.60, but I don't think we're going to get much lower. So I think if it was me right now, I would probably carefully float as well. So I have to agree with the analysts, and I think we have room to maybe get half of a point better. We'll see. So anyway, that's your forecast for this week. We'll see you in a couple weeks, guys. We'd love to hear your comments. Leave those likes and comments. And if you want more information on how bonds work and how they impact you as a consumer, you can go ahead and click at the top right there, and that's Mortgage Bonds 101. And that'll teach you the basics you need to know when you're trying to figure out the best time to lock in your interest rate. So anyway, that's it for this week. We'll talk to you guys soon. Take care. Bye-bye.